Hey everybody, welcome back to Swing Trading. My name is Mike Fairbourn. It's great to have you all back here on board with us today. Today, folks, I wanted to look at maybe the top 5 swing trading concepts that we've learned over 2025 into 2026 that we can use going forward. I want to talk about that in detail with you, just to make sure we're learning some of those concepts that we had gone through numerous times in 2025. I look forward to going through that with you. We'll also do a market review as we dive on into things. And then finally, after all that, we will take a look at some new stock trade examples. So I look forward to diving into that with you today. Folks, I'm joined in the chat by a good friend and colleague of mine, 35 plus year veteran in the markets. That would be Mr. Ben Watson. You've seen him out on the road, does some great stuff out on the road. Appreciate Ben being here as always. And folks, you can follow us both on X, Ben Watson CS. He's got some great stuff there. Particularly, I like to watch some of the things where he does travel around too. It's great. You can follow me, Mike Fairbourn CS, and welcome to all of you here today. Great to have you. Yep, a lot of the usual suspects. And if you are new, welcome. We just use specific time frames within the markets. We look at swing trading to capture those moves in the market where there might be the strongest portion of the strength within a given trend, but it's over a set time frame. More on that in just a second. But let's dive into some disclosures to get the show on the road here. Material presented today is intended for general information purposes only. Options carry a high level of risk, not suitable for all investors, and short options can be assigned at any time up to expiration, regardless of the in-the-money amount. Now, the paperMoney software application is for educational purposes only, and investing does involve risk, including the loss of principal, and for some products and strategies, loss of more than your initial investment. Now, there's no guarantee that the execution of a stop order will be at or near the stop price, and past performance is no guarantee of future results. Dividends are not guaranteed. As we do look at dividend-paying stocks from time to time, we sure do. Margin borrowing involves substantial risk. It's not suitable for all investors. And finally, quick look at some of the futures disclosures here. We just look at the charts of futures, but a quick note, futures and futures options trading does involve substantial risk, folks. It is not suitable for all investors. As a quick note too, if you are just getting into swing trading, we do look at those shorter term time frames. A lot of times, really, 3 to about, I was going to say 10 days, but a lot of times up to maybe 15 days. You can go that far. For me, a short term trade might be up to a month's time frame actually, but there are time frames, 3 to 15 days that we're really focused in a lot on this class. And a lot of those come up within, let's say, for example, a bull flag type formation that you'll see over here, where you kind of see the flag coming up. Many of you are just experts at this point. You've seen that. But our emphasis here in this class, as we look at bullish, this is a bullish trade. It's right around this area here. It's not only just recognizing this setup, that is true. That is the price pattern we're focused in on here, but it is that portion of the trade where we can actually see a follow through, because with price patterns, a number of them we do like it in this class, and other indicators we use, we do have also price projections that we talk about here too. So I'm sure many of you that have been trading for a while, you've seen this on the chart, but we're trying to gather from these setups a potential lower risk and a potential higher return. That's just the whole concept. And in many cases, we are trading with the direction of that stronger underlying trend. We link it into longer term trends as well, as it then focuses down into a shorter term trend. We have looked at shorter term charts beyond the daily, but most of the time we are looking at daily charts. Just a quick note here. This is just an example of the bear flag. Notice the trend is down. This is not a bull flag right here, although it's kind of got the kind of fools people sometimes that it could be a bull flag, but oftentimes it will go in the direction of the longer trend. I've just kind of drawn a bull flag in here, but yeah, in many cases, you're just looking at a bear flag there. Okay, with that, let's dive on into the markets here real quick and just take a look at where we're at very, very briefly before we dive into our discussion today. So a look at what we got over here, a great way to set up the thinkorswim platform. Just have those futures on the left-hand side, because yeah, virtually 24 hours, right? Throughout the week, you can see that market activity. Anyways, kind of an extension here of that ascending triangle. we are still focused or paying attention. I guess the market is respecting, that's the word I'm looking for, that upper trend line. You can see over here, here through here as well, along this line, touch, 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 touch again, as we're getting closer and closer to the apex of the triangle. Folks, all else equal, when you do have an ascending triangle, we just talked about this a little bit, but the trend can play a key role in which direction we think it might break out. In fact, you can kind of look over here. It's not exactly, I mean, it's ascending triangle-ish, but you'll get these sorts of moves. You're getting higher lows, and maybe the higher highs aren't slightly as high. You can see we broke up above this range. It's kind of a bullish formation. So I think a lot of traders are interested in this kind of a setup. Here is the NDX. You can see too that we did have a little bit more of what I would refer to as a symmetrical triangle. You can see that we were kind of getting lower highs and higher lows. We did break out and we're resting right now upon a higher high, as you can see right here, above that upper trend line break though, right there. And that is interesting that we are getting that at this point. You know, much of the NDX has led the markets over the years. Actually, we've seen so much strength. Let's say, for example, in the Mag 7. I have put up a collective chart of the Magnificent Seven over here, which you can do. You can easily just replicate by just typing in everything over here. You know, Amazon, Apple, all the way down the line. You can see them up top here. I better have 7. Yeah, counted 7 before. Yes. All right, so you've got that, but this is what it looks like. And you'll notice too that there is a little bit of a symmetrical type triangle or formation in here. Maybe not as clear, but you can see over here, it's almost sort of like a pennant too at the end of what? A longer term upward move. So all else equal, folks, traders might say that is a positive. We're holding these upper gains and we could see some movement. But the reason why I highlight the Magnificent Seven over here, and I have it actually as a watch list with it actually at the bottom down here, is because, my gosh, we have to look at what has been moving. The NASDAQ and what's actually been moving the S&P, because we can't forget that the S&P market weighted NASDAQ, you know, we're going to go over here and just show you like on a visualized tab, the S&P 500. Look at the Mag 7. Look at the size of these boxes here, folks. They do play a key role in the markets. And if that can start to break out and move, it could be somewhat interesting. So just be mindful of that. What is so cool is we could actually, even though we've got all the Mag 7 we just added together, you know, Apple plus Amazon, etc. I'm going to go over here and I'm just going to say something like this. Right click and just take advantage of the technology on the platform here and make sure that it texts me or at least try to get that text coming out. I'm just going to say higher here. And I just like to say higher. And then that way it can, you know, notify me via text message is the idea here of that move. And why didn't it go? Did I hit something wrong there? I just said it. Did I hit? I might have hit cancel. I'm always looking for the line to show up. There we go. And notice down here below, make sure that it is set up for the mobile. Otherwise, we ain't going to be getting a text message. You're just going to hear a sound, and you might be in the kitchen or wherever you might be. It's not working on that combination. I honestly was wondering if I don't think I've ever done this before, but we could put it on the individual stocks. Just wanted to throw that out there to you. And a quick note too, on those alerts, the alerts aren't always guaranteed. They're not guaranteed to be delivered or delivered at a specific speed or time frame, and should not be used as a replacement for actively being aware of your positions and the market activity surrounding them. I myself haven't had any issues with the alerts, but then again, they're kind of like ThinkScript. They're just not guaranteed, right? Things can happen, changes in the market, whatever the case might be. But okay, well, with that, let's dive into our core discussion now. And I'm going to go ahead and just set this back up because I do have my scratch pad up and ready to go. In fact, let's go ahead and go through our 5 swing trading lessons for 2026 that we can use going forward that we did learn from 2025. So I'm going to go through these just in the order I've got them written down. But the first one I've got, they're not in order of importance. I would say they're all highly important based upon what we've talked about. But be prepared. This is a key point too. In advance for potential outcomes. Folks, this is all about managing your emotions, is what it came down for me. First of all, it's a form of preparation as we look at the markets, as we look at particular trades that we've been in this year and last year, I should say. We did have, we did look at some gold stocks early on. And, although we didn't play all of these portions, we did play a few of the flags within some of the gold miners, but we were prepared for downside moves as well. We were looking at upside strength. We were looking at downside strength. This is just like a great example of one that went up. They didn't all do this, okay? But you can see we just had a number of flags in here that we had traded early on. We traded a few through here as well. And by the way, yeah, it's still flagging these companies higher as gold prices have continued to rise. But when you're prepared for those outcomes, one key thing that comes up, I'm just going to choose one scenario over here. Let's zoom in now, and let's say that here we're looking at a potential flag. Flag comes up, and we say, okay, here's a flag pattern. Is it going to resume the longer term trend after this pretty significant pullback? We had earnings, market still dipped down a little bit. We come down here and we get something like a close above the high of the low day, which was the first time we got it in this entire pullback, and we got it right there. Prices closed above the high of the low day right there. Now, within that time frame, if we're thinking ahead and we're saying, if I'm so bullish that I think it's just going to go up, I am not going to be ready maybe for the emotional outcome if prices go down. But if I have, let's say, for example, a stop in place, if I'm looking for a stop and I set a potential exit level already in mind, well, that can be very, very important, because what I start to think about already is it's not just going to be a guaranteed outcome to the upside. Folks, it's a form of working through the process so that if it does go down, I already have a plan in place, so I'm not shocked. Because what can happen is we just are ruled by the emotions after that point. And I don't know, I've done this before. If I don't have that in place, then I really don't have that sort of that pre-thought, that emotional kind of a protection, I should say, against an emotional response, that if something were to go down here, I know what to do. Trying to manage potential risk versus potential reward. Okay, that's such a key point. So going through that, it mentally prepares you. And I think what it does is it actually helps us build experience too, because we have all these different scenarios. Okay, if it goes down here, you're just thinking about trading more frequently. All right. Now, tying into that too, I didn't want to dive into it just yet, but it is so close to it. And I would say this. So understanding the importance of downside protection. Okay. And what are we talking about here? Well, it's having an exit place in mind. Sometimes we have used alerts, but specifically I'm talking about utilizing a stop order, right? Having that in place can be very, very important, because it helps us, it can send through an order, obviously, to compete with other orders to get us out of a stock once it's initiated, right? But it's not guaranteed to exit at that price, but it does compete with other orders. Just want to note that for people that are not familiar with it. It's not a guarantee at that price, but it does put that in place here for us. So as we're looking at a stop, it's so crucial. What you don't want to do is have a mental stop and say, I'm going to get out here, because why would you want to do that? A form of a mental stop that's much, much better might be something like an alert, because then you're alerted to it, and then you can decide if I want to actually exit or not. Look at all the conditions you've got in mind, right? Did it fall? What's the volume like? Is it breaking below that level? Is it maybe forming a, sort of a bottoming pattern, like a candlestick type of formation there? What are we looking at to kind of help us distinguish? I mean, so a stop or alert, but something to keep in mind. And it does tie in very specifically to this, being prepared in advance. If you don't go through that portion, it can be very, very difficult to do. I've been stuck in that position. I said, oh, just go a little bit lower, lower. And the one thing you don't want to do is build up that loss to make it bigger, because then it goes against that potential return, that potential risk ratio, reward risk ratio that we're looking at, and which is the reason why we got in the trade in the first place. Let me put it this way. If we come over here and I just say, oh, sorry about that. If I go over here and I say, we're looking at a chart and we're looking at a bull flag pattern, and I want you to just really think about this. We get into this stock because if it starts to break out here, gives us a close above the high, the low day, gives us a higher low, like the Jesse Livermore we talked about, 3 days of lows and then a higher low. Whatever it is you might be looking for here, we're getting a sign maybe right here. Maybe it's the 520 crossover. We've got maybe an additional day in there. Whatever it is, whatever happens first maybe out of those three scenarios. But if it starts to do this, that's not why we got into the trade in the first place, is it? Why did we get in? We got in because what was happening right here and here, maybe on light volume, and here, and maybe even a longer term trend up. But if it starts to go down, that goes against what we are after, and that defeats our return, risk and return ratio, right? Because if it just keeps going lower, that could be a serious problem. All right. So, I mean, those two go together. I got another thing here. I just kind of alluded to it a little bit. The next major thing that we could look at here is follow. And I'd really just say the importance of following the dominant trend. Okay. Following that trend. We've looked at, in this class, we've looked at market trends. We've looked at sector trends. Clearly, we've gone in here, we looked at markets, we looked at sectors, we've tried to find those areas of strength out there. And when we did that, even on the markets, the market trend, the sector trend, we like the concept of wind at our back, so to speak. Not in our face. It's very, very difficult to swim upstream a river, right? Swimming downstream, boy, you can fly, right? You can really go fast. Or, trying to row a boat upstream. It's difficult, but you can literally have that market sector. Are they giving us that strength behind the scenes? Okay, that's what we're focusing in on here. What about the stock itself? Those two can help to, assist in a stock that's already going higher, right? One that's already breaking up. So following the dominant trend, critical. All right, now we're going to get into an area that might be a little bit different, but how are you guys spending your time? It depends. I'd put it this way: spend your time wisely. How many hours are there in a day? 24, right? It's different on, Mars, of course. I'm kidding. No, but it's like there's only so much time in a day, and you've got to really focus your time and spend it wisely. And it's got to be focused on the type of strategy that you're doing. Let me ask you guys this. If we're talking about swing trading specifically, technicals versus fundamentals, what do you think? How much time out of 100% of the time we spend studying is in technicals versus fundamentals? What makes sense over that time frame? Keep in mind, 3 to 15 days, maybe up to a month most. What do you guys think there? Right? Probably technicals is going to be significantly higher because we're not holding through maybe an earnings event. Now, we check earnings when we go ahead and take a look at companies over here. When we're looking at a particular stock, we make sure that say, for example, earnings. This was an old trade that we still have on. It's just kind of developing still. It broke out a little bit, came back down. We talk a lot about earnings here. How are the earnings doing, relatively speaking? Are they beating expectations or not? That's a very quick glance at fundamentals, right? But all these other aspects, okay, 99 versus 1. Scott's doing what I'm doing right here. I'm just pointing to the earnings, and it's showing that's about a 1%, right? But yeah, 80-20, exactly. That's the point. It kind of fits what you're after. Now, if I was looking at a very long-term trade, and I'm just saying, like, whatever it might be, let's just say something that does pay dividends long term. Maybe it's like a Coca-Cola or something, and you've got this long extended trend for years, and you're trying to capture dividends down here, and you're fine with this sideways range because why? Well, you're getting paid dividends over that time frame to hold it. Maybe you're doing other things as well, but it's different, right? It's totally different because a lot of times these swing trades, we're going outside the bounds of fundamentals. So I think that really can play a key role, as we go through this. But yeah, spending your time wisely, folks, you got to do it. You got to do it. You got to spend it where you're getting the return on that investment. Market sentiment, trends, indicators, you name it, things like that. Breaks, gaps, support, resistance, bounces, things along those lines. Okay, I'm going to finish this off here just with an all encapsulating one, but we want to build on our experience. We want to use everything we've done. We need to have an open mind. We need to have an open mind in the markets and be willing to keep learning and learning and learning. And that's it's all encompassing. So we don't ever stop one thing that we've learned. We keep focusing in on it. We keep checking. What does the trend look like? What does the price pattern look like? Am I seeing, say, for example, a cup and handle pattern? Is it fitting correctly? What about the sector? What about the market? Are we in a bullish? Are we on a risk on or a risk off scenario? Is the market trending down or is it trending up right now in our expectation that will continue? This tries to help get us on the right side of the market to begin with from the get-go. So I could probably think of a few more of these, but I wanted to highlight these. I think these were key points for a lot of the trades that we looked at, getting us, kind of we're trying to get on the right side of the market. Where is that market sentiment on an individual stock, market sector, industry stock? We've done a lot of top-down analysis as well. All right. Well, there you have it. Top 5 swing trading lessons for 2026. We want to use all of that and more going forward because that last one, are we gaining experience every day? Absolutely. So we're going to keep building on it. All right, next up, our review. Let's take a look at some of our existing trades that we've got. All right, so this is one that's still continuing to break out. We put the initial trade in on Intel. And Intel was one of those sectors. Remember we talked about it. It was a few weeks ago. A couple. In our trade here, let's just double check when it was. I know it was coming out and we saw a hold coming in right here. We looked at 2 different types of scenarios. It was kind of a longer term run and there was a shorter term run over here, maybe a little bit of a flag pattern, potentially even here we were looking at. That's the one we were trading today. We're actually hitting that today. Okay, there were a couple that we looked at, but let me go into it right now so we don't miss it. Okay, I'm just going to go into and find out the date we did it. Trade history right here. Okay. It was the 29th. So the 29th, we put the trade on, and that would have been the 29th. Let's just see what we had right there. Yeah, there you go. So that was truly a close above the high, the low day right there. Do you see it all? That's our low bar out of this entire pullback. We never got a close above the high, the low day until we got it right there. And that's when we put the trade on. We're doing okay. Now, I did put a longer term trade on in the markets and sectors class, which was a few more shares. We put that on early, but this trade has done okay. This has run up real close to about, from here to here. Yeah. 36 to 47, about 11 points or so on 100 shares. So it's about 1,100, roughly. Let's go ahead and close this trade out, though, now. And I'll tell you why. We got to manage this one because it is right here. I was hoping we would get it during the day. Let's use the thinkorswim tools to help us with this. I am going to keep the longer term trade on. It's a different time frame altogether. Okay, so here we go. Let's manage this right here. We'll activate this guy, pull it over here. There it is. There's our target hitting today. I'm going to take this one off the table right now. Okay, so I did mention to you, I do have more trades on because we did have some longer term ones, but the 300 was the initial. We've got the 100 here, and we'll take that off right now because it did match our target. And we'll see. Maybe it pulls back here. There are earnings, and a lot of times, like we say, within swing trading, we get out before it actually hits. So let's do that right now. We'll go into the trade tab. In fact, we'll just take 100 off right now over here. Easy way to do it. I'm going to go down here and we'll just say quantity 100 sell, and we'll sell that right now. Okay, very cool. We took that off the table. Next one. We did have GEHC. We did last week. GEHC, now it has broken above some highs and it did rally a little bit. It didn't come anywhere near our move to the upside though. As you can see up top here, we don't have a follow through on it. And I don't know why our stops didn't go through. That's really interesting. I'll put those on right after. Of course, we're going to have, if we can break a new high here, I will raise our stop up to this level. Okay, is what we've done in the past. But as you can see, prices coming up here, we're getting up close to that 100, close to a target range here. So that's a big round number, and we could take it off just ahead of this time frame as well as we get up there. Okay, so let's look at that. And there you go. So GEHC. Also, I put this trade on yesterday, AMD. This was actually in Barb's class, but I wanted to add it to this account so we could track it as well. It had bounced roughly off that gap up 1, 2, 3 times right there, and off a big round number. And a lot of times, once you get above those levels, it can hold that point. Now, a swing trade on this could be actually, there could be a very large swing trade if we were to trade that. But remember, that's like the longest time frame we would look at in terms of the swing trade. That's from this level to this level here. Okay. And but it did last, look at that, about 1 month. If you didn't want to do anything like this, there is a swing trade over here, but that would get us very close to maybe just this 240 level. Okay, there is a shorter term time frame on this. This one we elected to do just as an option trade over here, just as a quick note. So we sold the 190 and bought the 185. So that one's up 705. You can see we did that yesterday in her class. You did get the bounce. Semiconductors have been strong. This has been market, folks. This has been sector. That was one of the stronger areas. We discussed that in the markets and sectors class on Fridays. And it did bounce off that level. We did actually do 3 contracts, but that was a short put vertical spread right there is where we're at. Okay. I just wanted to kind of show you the ranges, but if it was like a flag pattern, I thought it kind of was. And so we could look at that too. But if that's the case, it could have a lot more movement in there. Keep in mind that there is an earnings event in there, but this was a defined risk trade, selling a put down below this support level, below 200, and buying one just below that. All right. Okay. Wow. That was a lot. How about we get into some new trades as we dive into this right now? And we'll still stick with the tech theme. Tech has kind of been building up a little bit here as well as we go through this. Yeah, technicals every time. Yeah, technicals can be very, very important. You'll notice everything we're doing here, we might reference some of the fundamentals, but to get these longer term trends, you can't have companies like AMD, honestly, losing I guess technically you could. We saw that in the .com bubble for a period of time until it caught up with it, but it's really difficult to have a company losing quarter after quarter after quarter and still maintaining a longer term price trend. That's hard to do. And so once you're seeing the longer term technical trend go up, like for example, AMD over here, I'm going to just take a look at the quick weekly over here, a big gap, and we've been up for a long period of time since April of last year. There are fundamentals. So you can actually pick up, this is the way I kind of see it, you can pick up on a lot of the core fundamentals if you've got a longer term upward trend. And then the shorter term trend is also higher highs and higher lows. You're kind of capturing that already with what you're looking at. And then I mentioned just looking at the fundamentals over here too. It can be very, very quick and easy to do. All right. Hello to you, Mighty Mouse, as well as Riceberg and others just joining us. Great to have you guys on board. There is a survey in the chat, folks. If you get a chance to fill that out, that would be great. That does go on to my manager as well as me. And yeah, any feedback you've got as well, definitely throw that in, and we can, topic requests, things like that. Very helpful. So, by the way, while we're at it, yeah, smash the like button if you guys are finding this kind of content helpful and useful for your swing trades. Now, the next one we've got is Texas Instruments. Texas Instruments does have earnings. We are coming up to earnings season, and we're coming up pretty close. Got a special lesson planned for that coming ahead around as it relates to options around earnings time frame. A few things that we can talk about with swing trading there for sure. But you guys see a little bit of a trend maybe developing here as well. A lot of people would say that this is kind of cupped over here. But even if we don't even define that as a cup and handle, it's a little bit of a rounded bottom, as you come back down in a sharp move to the upside. But if nothing else, I mean, that is a bit of the formation of right there. You guys can see it, the flag pattern up here. There's a flag right in there. We're taking this range and we're measuring it in price off of the bottom right there. Oh, point to it, to the upside. We're about halfway there to that, just eyeballing it only. As you guys can see, we're just about there. But within that flag, there might be also another flag, and I'm very, very curious. Watch this. We're gonna map out two of these because I've seen, and technicals are fascinating this way. Sometimes how things tie in. Let's go ahead and just go a larger screen. I'm going to pull this down so I can really highlight this for you. That's our year-end line. That's the grid line right there. I'm going to pull this down so we've got a full distance. So let's do our first flag projection, low to high, right there. Okay, that's the high, I guess, if we're using the absolute high. I can either duplicate this. I'm going to duplicate it for now. And I'm just going to pull this over here off of the bottom. So that's the longer term price projection right there. It gets us to about 205 and change, real close to 206, but right in that range, okay? That's longer term flag. Shorter term flag, and I'm going to mix up some colors in here. Let's do it this way. We're going to be really, really deliberate on this and just see where we're at. So I'm just going to change this color right now to make that key distinction. We'll even thicken it up a little bit. Okay, so there's the shorter term. I'm going to just, in this case, I'll show you, we can just activate it too and just pull it over once we've measured it. And I'm just estimating this could be a low here. This is kind of the consolidation. Now, some might say, Mike, that's your low. And I could say, yeah, it could be. Sometimes it's right at the price, right at the level that price takes off. There's a couple of different distinctions. That was a quick pullback. I'm going to go ahead and just use it at that level. Look how close we are. Real close to 204, real close to 206 or 205 and change. 204, 205. Do you see kind of a sweet spot in there? That we actually have a longer term flag and within that a shorter term flag within that time frame that might come in a little bit quicker. Interestingly, though, we do have earnings, like we said. Tech is early in that earnings cycle. A lot of tech is. A lot of semiconductor tech is in that area. Okay, if I step back and just look at this now, I got to tell you guys something. There's another number out there that I want to keep tabs on. Do you see it too? It's right around, well, the century mark times 2, double century mark, 200. I know we're getting close to it, but sometimes those big levels, they can act as resistance. So is it worth our while here, first of all? Well, that's roughly where we're at, 188. So that's about 12 points. Thinking now, where might our stop be relative to our potential reward? Let's go ahead and do this right now. I'm just going to go over here and remove this guy so we can actually see it. I'm just going to leave this longer term one in here, though, but there's 200. Technically, there's a bigger run over here, and sometimes stocks will do this. It's not uncommon to run through a big picture resistance level, and if you can get above it and hold, that could be support. Some traders, look at this. If I put in 100 here, well, that's a lot. You know what? It's kind of an expensive stock. Let's say 50. And there would be ways that traders can use options. I'm just going to use stock for now, but if they did a plus 50 shares in here, or even half that, whatever the case might be, if it goes to 200, some traders would say, well, Mike, at that point, we're at the 200. I'm going to take 25 off and let the other one ride to the long-term trade to target right there. It's a little bit of risk management so that in case we hit 200 and we dip back down, wow, we've already pocketed those 25 shares and it's a big deal. We're only losing 25 to the downside now too, because we're less 25. So that we're not losing as much from that 200. Okay, I'm going to pause. Which of these over here am I doing right now? Maybe more than one, but one does come to mind. And that is this: being prepared in advance for potential outcomes. Folks, if you're using trade management or trend management, congratulations. You are preparing in advance for specific outcomes, and you've already gone through it once, twice, 3 times or more. Emotionally, you're ready to do it because that's what makes sense now before it happens. You know, we don't get thrown off by it. Long term as well. All right. So that's that. Let's go ahead and put this trade on right now. And what we've got to do is we've got to decide where we want to put potential exit level at. Do we want to put it below this point or up here? It's a little bit tight because we've already run up a little bit, but if we come down through here, there is an exit level right through here. If we're getting in, let me just draw this out in red. This would be our potential reward risk right there. That's about the size of it. If we get out below this low, that might be the lowest low we'd be looking at right there. But what about the return, potential return? Well, I'm going to draw a couple lines in here. First one, 200. Is it bigger than my potential risk? Yes, it is. It looks like it to me pretty clearly, right? We're going to go to T2 now. What about this return? Are both of these lines bigger than the potential risk? Yes. Okay. So that's a consideration right there. Now, I've got one more I'm going to throw out to you because we're thinking in advance on this. And some people would say, God, that's a long way down, Mike. Are we sure it's going to break here? One thing you could actually do is really zoom in one more time and say, if I start to break out above this range right here, this then could be my stop, potential exit level, right? It narrows my target range down, my potential reward, but I'm waiting for even further confirmation. Okay, further confirmation. I could buy 25 here and then buy another 25 here. There's a lot of things we could do as we think through this. Okay, but for now, let's just do the 50. And because I did want to put a trade on during class, to be honest with you, I wanted to get one under our belt, but I just want to, you can throw in any paper trade scenario you want. Right-clicking under the ask price, buy custom with a stop order right there in place. Now, the first thing I'm going to do, put these good till cancel. I want to put that in place. Let's go ahead and put a 50 share over here, tab through it, line this, link it up by clicking the link on over here. And what happened? I missed the wrong one. OCO bracket. There it is. Okay. We missed it. There we go. Now we've got an upside target as well. Now, in the meantime, I'm going to go ahead and just pull this down to 185. I can always drag it on the chart if I wanted to. And my target, I'm going to look initially at, let's reset this too. Got to go 50. Tab through it. I already had it linked. Good till cancel. That's looking good over here, wherever we have it. This is how I want to do this one. I'm going to put this one up a little bit higher. I'm going to say about 205 for the T2 target. But watch what I do. So let's look at the order dialog box right now. There we can see everything's set up. It's 50 shares. Be mindful, it is an expensive stock. We're not using options today. I'm just using stock, but of course, options could be used. Let's go ahead and click on Send Now. We've confirmed everything. We'll get that under our belt. And what I want to do is click on charts. I'm going to pull this guy down now. Just put it just below here, that level, okay? And our target, I got dang close. I'm going to just keep it right there, just below that upper target, okay? Now, what I want to do, though, at 200, or at this level, I'm going to right-click again, and create an alert right there. So I'm just going to be very straightforward at 200. Okay. So I can see how the price behavior of the market is doing right around 199 and decide from there if I'm going to take off 25 shares or the entire thing. Okay. It does take a little bit more discipline to do this, right? And it is a little bit more discretionary than me just throwing at a 25 at that level and a 25 above. Now, we could do that, and that's something we could do going forward, but I'm just kind of maintaining and utilizing some of these additional tools here. Okay. Yes, there is some of that. And it sometimes, and this, it sort of defies what a lot of us do within the markets. But interestingly enough, when people would say, "Hey, Mike, why are we buying higher? I mean, why are we buying more when prices are going higher?" And let me answer this in one easy sentence, simple sentence, because it's doing what we thought it was going to do, or it's doing what we expected it to do. It's going higher. So if it's doing what we expected to do, don't we want to be in that trade with the full amount that we originally had an idea to do? I know we didn't get it all lower, but we didn't know the future. So once it takes out, let's say, for example, a breakout, a very common place to add to it, it's doing what we thought it was going to do in the first place. And so therefore, we've already gone through it and it matched what our potential reward, potential risk looked like, right? And all the market sentiment and everything else we looked at. So there's that. Okay, I've got to slip another one in here. I'm going to show you another one. We'll have time for one more, but I also wanted to highlight a couple of details. This is kind of a shorter term one. I'll give you another stock that we could potentially look at too. But looking at over here, look at this. Very short term flag patterns. You can just see them. Right there, right there, right there. It kind of matches like a real swing trade time frame. Now, what just happened? We just shot up on better than average volume for sure, and we rested right near prior highs, and we're just sitting there. Now, the interesting thing about BMY, because I do a lot of fundamentals, and so I'll throw them in, if I bring them up, just about looking at companies and things along these lines. But this is a company, and the whole idea is one of the reasons why it's been down is because they didn't know if a lot of the drugs that were falling off patent would be able to be offset by a new growth portfolio. And you've heard a lot from management on these conference calls suggesting that, yeah, we think it can be strong enough. And, a lot of analysts and what across the board, I don't have anybody specifically, but they're saying, maybe the 65 plus range is where it's fair valued at. And I think this just might be a rise to fair value. And within that rise to fair value, are you guys seeing any flag patterns? Maybe some incy-bincy ones, right, that we're seeing in there. It does pay a dividend too. And of course, yeah, we got to run into it. There is the earnings event. So let's quickly get this one under our belt so we can wrap this up. Again, if you're finding value, folks, smash that like button. Be sure to subscribe to the Trader Talks channel. I'd love to have you guys on board. This is a really, really small flag if we look at it this way. And it's about 52.50, okay, up to about this range here. So I'm just going to kind of eyeball it, and I'm going to say maybe it's a little bit longer if we look at the whole flag, but maybe somewhere around or greater than just above 60. I'm just eyeballing it for now. Do you guys see it? Okay. This particular one, might be known as a bull flat. We can have potentially a stop just below this range, maybe give a little room for support, but a target above this range. Very short term in nature, but it has been very sort of gappy once it flags. Will it do that? Well, that remains to be seen. But that's been kind of the setup for this stock for a little bit. I'm just going to go with 100 shares here, and we'll call it a day on that one. That's all set. This is right above 60. I'm going to go 61-ish. You guys can see kind of what I'm doing in here. I'll go back and line these up more, but you guys know now, as we look at the dialog box, kind of the projections for this as well. Okay, there we go. Let's send it through. There it is. There's our trade, BMY. Do you guys see it? Right over here. I'm going to do a quick adjustment to this in the last 1 minute I've got before our next group comes in. But there you go. That's about the high. And we're just going to eyeball it. And yeah, I'm not quite there, am I? It's somewhere near this range right there. Okay. Think about in terms of, let me pull that up a little bit, right about there. Reward versus risk. Short term, but there you go. All right, everybody. Great being with you today. We did review, again, our top 5 swing trading lessons for 2026 that we, for this year, that we learned from last year. Really appreciate you guys being here. The feedback that you get in the chat, I really like that. I like to go back and take a look at a lot of these. Yeah, sometimes when that RSI holds up to a higher level, that actually can represent strength in a stock too. But then again, I mean, take a look at other charts that can give you some ideas on that too. All right, you guys. Well, hey, thank you so much, Ben. There is a survey in the chat as well, and Ben has pinned that. If you guys get a chance to fill that out, that would be great. I appreciate it because I'd like to read through those. And so does my manager. All right, everybody. On this note, be sure and follow Ben and I on X. Would love to have you guys on board. All right. Take care, everybody. See you next time.